Welcome to Breaking Bread Presents Reading Between the Lines. In this session, I wanted to go over the wicks and the story that the wicks tell, and how I use the story within the wicks to find some high probability setups. So some of the things we're going to touch on in this session are: what are wicks, the story in the wicks, type of wicks, price has memory, entry, chill, stay in or get out, and of course we're going to end with the bread and butter, which is just a brief recap of some of the key things that we're going to talk about today. Alright, so let's begin. What are wicks? A wick, also referred to as a shadow or tail, refers to the thin line that extended from the body of a candle. It's normally found at the top and or bottom of the candle. Now, these thin lines represents the highest and the lowest price has reached during a specific time frame. So if you look here in the image, these thin lines that you see at the top and bottom of these candles are your wicks. Now, if you're not familiar with how these wicks are formed, let's do a brief anatomy class on how the candle is formed. So this is a clear uptrend candle. So for an uptrend candle, price is going to open at the bottom of the candle. It's going to push to its lowest point, which is forming this wick at the bottom before it begins to push back up, forming the rest of this body before it goes to its highest point, which is giving us the wick at the top of the candle before it pulls back down and closes at the top. So based off this single candle, this is the highest price got, and this is the lowest that price got. Now for a downtrend candle, it's the reverse. So here you see a downtrend candle, price is going to open at the top of the body before it pushes up to its highest point, creating the wick at the top, before it pulls back down, creating the rest of this body before it goes to its lowest point, and then it's going to pull back up and closes the body at the bottom. So this is the highest price got on this candle, and then this is the lowest price got on the candle. So that is how wicks are formed. So what story is the wick telling? The wick provides valuable information to us, the trader, about the price action and the volatility during a specific time frame. Now we know the body of the candle is important and we can never ignore that, but the wick, especially the length and positioning of the wick relative to the candlestick body, can indicate the strength of buying or selling pressure and can make us help inform decisions about the market trends and the potential movement. Now, which wicks tell the best stories? Now, to me, the long upper wick and the long lower wicks are the best stories. But you also have your no wicks, your short upper, your short lower. Whatever you feel is the best story to you, but they each should give you a different type of analysis when you're trading. But the best story, when you see these long wicks, especially coming off of previous levels of support and resistance, previous levels of high and lows, which is your year, your month, your year, your quarter, your month, your week, your day, sometimes 4 hours, the 50% of those same time frames. Fibs, if you use indicators, your EMAs, your SMAs, your VWAPs, these long wick candles, you want to see coming off those levels. And if you do see that, then it's a high probability that a retracement may be coming soon. And then you want to build your case on why you should take the play or not take the play. And then if you're already in the play, should you exit or should you stay in the play? So this is the example of the short upper wick, short lower wick. It's a cool story, but it's only interesting to me if I'm already in the play. And this is giving me confirmation that there's really no fight between the buyers and sellers and that this play should continue in my direction. Now, the candles that I like are these long wicks that I said. So you got your long lower wicks, your long upper wicks. And you want to see these coming off the previous levels that we spoke about earlier. So the high and lows off your year, your quarter, your month, your week, your day, sometimes 4 hour, the 50% of those same time frames. You want to see these type of candles coming off those levels, previous levels of support. Side note also, if you're not familiar with support and resistance, I do have a video on my channel where I go over support and resistance using these type of candles. It's a retrace video, so when you have time, go ahead and check that out. All right, back to the session. But you want to see these type of candles coming off those VWAPs, them EMAs, them SMAs, my favorite Fibs. You want to see these type of candles. Now, candles like this, it does have a long wick, but sellers are still in control. It's not telling you who's in clear control. This is telling me who's in clear control. This one right here is an indecisive candle. So no one's really in control here. Some like to call this a doji candle. But there's no clear indication of who's in control. All right, so price has memory. Price has memory refers to the idea that historical price levels and patterns can influence future price action. Now, this concept is based on the belief that traders and investors remember past price levels and react to them when making trading decisions. So you always want to make sure, I say this all the time, is look to the left. See what price did in the past because it's a high probability it repeats itself until price tells you otherwise. Treat it as such. All right, so entries. So some things to help you build a case as to why you should take a play are if you see a setup where price is giving a strong reaction, so giving you one of those long wicks coming off a strong level that we talked about. That should add to your confluence of maybe I should take this play. If I look to the left and it's done it in the past and we're currently in the present and it's doing it again, that should add to your confluence of taking that play. Now make sure before you take that play, you look for the next level price could possibly react at that's going against you, because you want to make sure your reward is worth the risk of you taking that place. And then also you want to do your top-down analysis. I do my top-down analysis whether I'm day trading or swing trading. I'm starting at the year and I'm working my way down. You can do what best for you, best works for you. But for me, I like to see the whole clear picture regardless of what I'm doing. All right, so should you chill? So this is if you already in the play, you don't know if you should get it out, should you stay in? So some things that you should be looking at and asking yourself is the wick of the candle coming off a strong level. So you're in a play and you see price react to a strong level that's going against the play that you're currently in. That should be a signal to you that, hey, I may want to cut this. If you see prices flipping continuity on the higher time frames that's going against you, you should say, hey, I may want to cut this. Is it just a retrace? Now we know price doesn't go straight up or down, and a retrace is inevitable. But just because price is retracing doesn't mean get out. I mean, unless your plan says we don't handle pullbacks, we'll cut that. Then go ahead and cut the play. But you want to make sure if you be patient and just see what price is telling you and see if it's respecting your levels. Now, what do I mean by respecting your levels? That means is price closing below or above your levels, depending on which way you're playing. If it's not, then chill until price tells you otherwise. So don't let your feelings interfere with what your eyes are telling you. Whatever your plan was before you got into the play, then stick to it. When price goes against your plan, then get out. It's always other plays. All right, so my recommendation to you when looking through your watch list, you're setting your watch list up, you're finding your top setups, everything's looking good to you on the higher time frames. Regardless if you're swing trading or day trading, I do this for both because when I'm looking for entries on plays, I want to get the best entry at the discount. I want to catch price when it's already retraced and it's starting to head back in its original direction. But I recommend you drop down to the hour time frame and mark any long wick pivot point candles that you see in recent time, so it doesn't catch you off guard if you're in this play and it goes against you. It starts heading back the other way. So two examples here. I have an uptrend one and a downtrend one. But you can see price created this long wick here at the top. It ran right into a previous level of resistance before it began to pull back. The next candle, hour candle, opened up. It didn't even reach it, so it made a lower high. So if I was playing on this day, I have my levels marked to where price may do what it did previously. And as you can see, I'm sure somebody got into play for calls because this was a strong push up before it slowly started to lose all the gas that it had. And it began to pull all the way back down here. But since you have this level marked, it shouldn't catch you off guard, because once you see the body get back below this candle, which did it in the most recent time, then you may want to cut that and just wait for re-entry if it give it. Now on this setup, it did not because it gapped down the next day. But you want to go down to that 1 hour and mark the most recent pivot point candles that you see, so you're not shocked if it happens again. Same thing on this candle. This setup here. You see price got down to this level. Every day it did it. It did it once, twice, 3 times. Then the 4th time, it finally took off. But if you have this marked, you wouldn't be shocked that price gap down. It holds that level and then pushes back up. You're not shocked that price opens up. It pushes back down to this level, but then it pushes back up. You're not shocked by it because you went down to that hour and you saw that price could possibly retrace back to this level before heading back up to its original direction. So make sure you're doing that. Go to that hour, mark the any most recent reactions that you see. All right, so let's play a game of stay in or get out. Now, these are setups that I look for when I'm putting my watch list together. But I wanted to turn it into a game and see if you would stay in the play or get out of the play. So let's get to it. So we have a 30-minute time frame, 60-minute time frame. We're looking at this area here, which is this area here on the 30-minute time frame. Now, if you were in this play for puts, are you staying in or are you getting out? Give you a moment. Don't overthink it. Look at how it's marked. Look at your previous support levels. Look to the left. All that greatness. Staying in or getting out? Now, if you say get out, that is the correct answer. Why? Let's look at it. All right, so price came down. It broke through our first levels of previous support. Cool. Now we're playing put, so that's cool. It got to our second level of previous support. It bounced right off of it. All right, so we're going to hold it and see what that next candle does. That next candle doesn't even touch it. It makes a higher low. So that should be a signal of, hey, I may want to get out of this play if I'm in here for puts. And if you're not even in this play, then this might be a signal for, hey, I can take this for calls. And if you look at it on the higher time frame, as you can see, it broke through, pulled back up, and it closed above both previous levels of support. Now, if you wanted to hold on to that next candle, you definitely can. You see price push to the previous level of support. It still bounced right back off of it to head back up in this direction. But if you were in this play for puts, this is not the one you want. Now, if you want to take this for calls, definitely go for it. It's respected your previous levels of support and resistance. It's giving you that long wick that we like, and it's heading back up in this opposite direction. So this is, to me, getting in the play at a discount because I'm getting in down here. I don't want to get in when it's already heading back up. That's not a discount. I want to get the best possible move. And the best possible move is catching this particular play at the bottom once you get confirmation that it's heading back up in the opposite direction. All right, so this one, we have the day time frame and the week time frame. We're looking at this candle and we're looking at these candles. So, would you take this play? And if you are taking this play, would you take it for calls or puts? Look at the information that is given and decide if you're taking this play for calls or puts. I'll give you a moment. All right, so if you said puts, that is correct. If you said you wouldn't take it at all, that's great as well. As you can see, price got above the previous level of resistance. Cool. Next candle on the day, it pushed above the previous level of resistance, but then it started to pull back. Next candle, same thing. This time it pushed above it, closed right at the previous level of resistance, and then the next day it gapped down. But as you can see, we are making lower highs. So since we're making lower highs, that should be a signal that this is probably going to start retracing If not, just reverse fully. So this would be a signal for you to possibly want to take puts to the downside and see what that move gives you. And this is a shooter on the week. So if you definitely see the shooter on a higher time frame, that should give you added influence to take this play down to the downside. And as you can see clearer on the week chart, it gapped down and it kept going down. So you said puts, you are correct. Congratulations. All right, staying in, getting out. Now this time I don't have any previous resistance on there. You're gonna have to use your own eyes, but I did give you some fibs. And if you're not familiar with fibs, well, watch my fib and chill videos because they're all in my channels. But looking at this situation, let's say you was in this play for calls. Are you staying in or getting out? So this is the 60 minute, 30 minute. So this whole area here is this here. So are you staying in or getting out? Remember to look to the left. All right, so if you said you're cutting it, you're correct. If you say you're chilling, you're correct. It depends on which time frame you're looking at the given time. But if you look here to the left, price was bought up here the first time. So looking to the left, you think to do it again. So if you see this candle, it did push past the fib levels 50% before it was bought up again. Now this candle here, if you're playing off the 30 minutes, this is why I said if you said cut it, it's not a wrong answer, because I know this strong move, if you're playing off the 30 minute, that would have scared you out of that play. You would have cut that one. That was too aggressive of a move. You probably would have cut that. But now if you're playing off the hour, you see price did push past the 50% and the 61.8, but it did the same thing it did last time. It got bought up and then it continued in its uptrend. So either one is the right answer, but just make sure you're sticking to the plan. If your plan is to cut it when price closed below the 50%, 61.8, then cut it if you're playing off the 30 minute. But if you're playing off the 60, you know you got to give yourself some time, because the market is trying to scare you out of your plays when it does these aggressive moves. It's trying to find your stop, and it's playing on your fears, hoping that you close out this play, especially with an L, so they can make them some money as well. So if you said stay in or get out, then you are both correct. Depends on you and your style of trading. All right, so another one. What we got here? All right, so let's say you're in this play for calls. You have your day time frame, your 60-minute time frame. I gave you fibs and your resistance level. So based off of this, if you're in this play for calls, are you holding it or are you letting it go? Give you a moment. All right, so if you said that you would stay in this play, that is the correct answer. We are going to chill. There was no need for you to get out of this play. Now, this is the only time I'm probably going to mention the body in this session, but it is important for me to mention. As you can see here on the day chart, price got above the previous level of resistance and went to its highest point before it began to pull back down, but price closed above the level of resistance. So since price closed above the level of resistance, then that should be a signal for you to stay in this play. And if you look over here on the hour time frame, you see price got back to our 50% level. It held that strong and then started heading back up. So with seeing that, should give you strong confirmation that this is probably going to continue in its uptrend. And if you see up here, it's definitely the risk to find out, because our next previous level of resistance was $10 away. That's definitely worth the risk to find out if you should hold this play or not. You see, it ran right into that level of resistance before it's a pullback. So it's definitely was worth the risk. But if you said hold this play, correct, hold it. But if your plan said cut it, then I guess that's not wrong either. But as long as that body is above that level of previous resistance, then you're going to hold that play and trust it to continue in your direction. Now, if the price closed, now that's different. Now, if price closed below this previous level of resistance, then you probably want to cut that. But as long as that body is above that and is closing above the level of resistance, or if you're playing the opposite way, if it's closing below the level, then go ahead and trust that play to continue in that direction. All right, so the bread and butter. What are some of the key things that we talked about in today's session? We talked about price has memory. We always talk about looking to the left and seeing what price did in the past, because there's a high probability that it's probably going to do that in the future. Until price tells you otherwise, treat it as such. We talked about top-down analysis. We talked about I starting at the year and working my way down. You do what works best for you, but I like the full picture. We talked about the key levels that you should be looking at. So that's the high-low of the year, the quarter, the month, the week, the day, sometimes 4 hours, the 50% of those levels. We talked about support and resistance levels. So we talked about Fibs. We talked about if you use VWAP, EMAs, SMAs. Then you want to see those pivot point candles coming off of those levels. Then you always want to look for the next level that price could possibly react to, and make sure before you get in that play, it's worth the reward is worth the risk. And then, like I just showed y'all in the last example, where is the body in regards to the level? In that last example, the price closed above the level of resistance. So since it closed above the level of resistance, then that's a confirmation for me to hold on to this play just a little longer. Now, if price closed below that level, then that's a different situation. But make sure you're looking at where price is closing in regards to the level. If you're playing calls, then you want price to close above the level. If you're playing puts, then you want to see price close below the level. All right, so we have come to the end of this session. I hope the information in this video will assist you in some way along your journey. 2024 is our winning season. If you have any questions or comments, feel free to DM me or drop it in the comment section below. I will get back to you. But until next time, I thank you for breaking bread with me. You all stay blessed.